Okay, yep, we're good. Dyke, you are live.
We're on the way.
And we see you. Yeah, we got you visible there.
Ten, five, go.
Hey everyone, it is Wednesday. You are listening to 97.5 FM KDEE. I am Agent Key, and this is part 3 of a four-part series where we are talking about loans and financing and the type of home loan mortgages that work. I am happy to announce my guest today because he is also one of my newest lender partners. We have yet to do a transaction, but I've got a feeling that I'm probably going to do more transactions with this guy than ever before. And I'll let y'all in on why that will happen in the future. So you'll have to stay tuned to find out why that will be so. But I want to introduce you all this afternoon to Mr. Dyke Mundy. And Dyke is the VP as well as the
Home mortgage sales manager at Tri-Counties Bank.
Yes. And if you're watching us online right now, we are on Facebook and YouTube, and you'll be able to see Dyke's handsome face. And if you're watching us, please say hi to Dyke in the chat. Please feel free to answer or ask us any questions. We are going to dive into the show today because I subtitled today's show, Wait a Few Weeks to Buy, with a question mark. And I got that title from a Bloomberg article. And I just want to read a little bit to you all to prep you for what's happening. There has been a change in the market, and it's been an expected change. And unless you are actually in it, buying or working in it, a real estate agent representing someone or a loan officer representing someone, you don't really know what's happening. You won't know what's happening unless you watch or pay attention to the headlines. And so I want to read to you a little bit from this Bloomberg article entitled Ready to Buy a House? Just wait a few weeks. The market is cooling, but buyers should bide their time before jumping in. The housing market has turned in the past few weeks. We're probably looking at a cooling off period rather than something nastier. But both possibilities lead to the same conclusion for would-be home buyers. Be patient. It makes more sense to wait to see how much the market will loosen rather than rushing in now at the first sign of improvement. Buying conditions are likely to be more favorable in a month or two than they are today. It was mortgage rates that finally broke the fever. Their relentless rise got to a level that changed buyer behavior. Earlier this month, the 30-year mortgage rates rose to their highest level since 2009. Mortgage purchase applications have fallen to their lowest level since 2018. And, the inventory of unsold single-family homes, while still far below pre-pandemic levels, is now rising on a year-over-year basis, according to Altos Research. And I want to stop right there because someone brought to my attention another article that's out there. So you all really have to be careful of the headlines. There's an article floating around out there that would make you believe that housing prices have fallen in California at 29%. But that is not what the article actually says. What it says, and I wish I had I actually do have it. Let me find it. This article is saying that housing prices fall. Is the housing boom about to bust? Sellers are slashing prices at levels not seen before pre-pandemic. Not seen before the pandemic amid rapidly cooling market, as hedge fund manager of the Big Short fame warns it's like watching a plane crash. that makes it sound like the sky is falling. And they've got these graphics on here that says Sacramento, California has dropped 29%. If y'all are watching online, I'm going to try to let you see this. Can you see that? They've got Sacramento County in there. Now, this is a graphic that shows a 29% drop in Sacramento, California. And if you're not careful, it would make you believe that they're talking about prices. What they're really talking about is the percentage of sellers who have overpriced their home and have had to reduce the price. So you really have to be careful. The article is true in that sense. There are a lot of sellers who are listing their homes at a certain price. Sellers, if you're listening, the market's changing on you. You're going to have to do a price reduction if you list your home higher than market value. Listen to your agents when they run comps and they tell you this is where your house should be priced, but you're looking at that Zillow Zestimate and Zillow's telling you you should get $100,000 more. You're going to be sadly disappointed. You're going to miss the Grady train is what's going to happen, because once Dyke joins this conversation and we start digging into what's happening, it's not going to be a surprise. It's just going to be hard for you to accept that it's possibly happening. And no one has a crystal ball, but this is where the signs are pointing, and you need to be prepared. So, Mr. Mundy, welcome to the show.
Well, thank you. It's great to be here. Thanks for having me today.
And we had a couple of bite-sized conversations before we got started, and I kept saying, wait, save it for the show, because there's so much that we want to unravel right now. So let's just talk about what's happening with the market right now, the current market trend. So the story that we just read from Bloomberg says that the market's kind of taking a little turn. What are your thoughts on that?
So it's interesting. I think you have a lot of dynamics going into this. We're in inflation, so you see the Feds moving up interest rates to kind of slow the economy down. You have home prices that have gone through the roof, but I think right now we're starting to see, and just in looking at data, talking to agents like yourself, things are starting to level a little bit. And home prices, rather than going up at such a fast pace, they're starting to slow down.
Right.
Inventory is building. I mean, there's still not much. There's not enough, but we have a little bit more than what we had before. And rather than home prices selling above list, maybe they're selling at or slightly below. So there's a change going on there. Now, where we go from there, whether we keep going up a little bit in some markets, we stay flat, we go down. Some of that's going to be market by market. Some markets are going to have something happen. You may have something in Sacramento that's different than what happens in Bakersfield or in San Francisco. So it's kind of market specific, and you've got to understand the market rather than take it as just it's all the same everywhere.
Right.
The other thing that's been kind of really hurt the market, at least in the short term, is just the increase in rates, the rapid increase from January until now.
Yeah.
I mean, you had a 10-year treasury that went from 1.6 to 3.
Yeah.
You had interest rates, 30-year fixed rates that went from high 3s, 4%. Now we're in the low to mid 5s. Yeah. That's a big psychological change. Mm-hmm. Now, again, if you think back over history, my first loan 25 years ago was at 9.5. Mm-hmm. So to me, 5% still cheap. Mm-hmm. But if I just came out of a cycle where I'm at 2 3/4 to 4, it's what the heck just happened. I lost some of my buying power. So
but the other side of that too, with the interest rate rising or creeping and people kind of cringing, if we look at home prices 20 years ago versus home prices now, that interest rate then, a 5% interest rate 20 years ago would have been like hallelujah.
Yep.
5% interest rate now on a median sales price home in Sacramento County, 557, something like that, is like terrifying.
No doubt the affordability index has gotten a little bit out of whack. And that's why I think most people, the article you were reading, and a lot of people you'll listen to will say there's going to be some correction. I don't believe it's anything like 2008. It was a total different time period.
Right.
The bigger issue then on top of you had a lot of mortgages, which are not around today.
Right.
And you had a jobs crisis. So you put those two together, a lot of mortgages that were probably not great for borrowers who were getting in them.
Right.
And you have people losing their jobs, and that created a problem. I think this one, you're going to have a little bit of a correction, but again, it's going to be market specific. And in some areas, it may be very little. Some areas, it may be a little bigger, but you're right. The affordability challenge today is there's not as many homes in that lower price point. And with rates, whether they're in the mid or upper fours or the fives, for some people, it's a tougher place to play in because they're trying to qualify for their home.
Right. And also part of the crash back then, two other factors were we had excessive amount of inventory, whereas today we're still lacking in inventory. We're probably 5-10 years out. The other issue with having an excessive amount of inventory, the buyers back then that were buying up a lot of the properties were investors, versus now there are people who are just trying to buy a home to own or occupy. And so we're seeing a rise in a whole bunch, it's a domino effect on other parts of our economy as a result of us not having enough inventory.
Correct.
So where we are with the direction that we're possibly going in, because, and we talked about this a little bit, I was sharing that prior to COVID, the thing that occurred that we are not really paying attention to was that the governor signed in all these laws, and he enacted all these laws that would help increase and expedite housing in the area of homelessness, in the areas of lifting some of the, taking some of the red tape out of local government to allow builders to build faster or to build more seamlessly. I would say down payment assistance program money, things like that, to make housing more affordable. Those things were coming down the funnel before COVID. COVID came and just put a lockdown on all of that. Now that we're becoming more acclimated to COVID, people are feeling more comfortable getting out, and we understand it a lot better. When you step outside now, you see construction happening all around. My assessment of this is that this is that housing production that was supposed to be coming almost 2 years ago, and now it's coming. So that, in addition to the increase in the interest rates, which has kind of made people put on the brakes a little bit, now we are going to actually start seeing, we're already feeling this loosening. And I agree with you, it's not going to crash, but we are probably going to see the market flatten a little bit. And when I say flatten, and I try to use that term a lot on the show to get people to understand the difference between a crash and flattening. Right before COVID, the median sales price, I think, was approaching $500,000, if it was not at the low $500,000. Buyers were still in there buying at that time. So that was a comfortable purchase price. That was a comfortable purchasing point as far as the median sales price is concerned. If we see prices flatten, would you agree that we're probably going to see them just maybe not as low as that? They're still going to be in the 500,000.
Yeah, I mean, again,
median sales price.
I'm not a genius when it comes to the economy, and I don't have the crystal ball. And I think a lot of articles you read, you have to be really careful because there's going to be two sides. You're going to hear different opinions from different people. In my opinion, I think from people that I listen to, as the inventory grows, it becomes just purely supply and demand.
Right.
As that supply starts to increase, it'll be dependent on, are people sitting on the sidelines waiting, and that supply continues to grow, and then as it does, you'll have a little bit more of a decrease going on. Or do people continue to jump in because rates are still great? They adjust to that new rate in the fives, and they feel comfortable. They understand I'm really making a payment. It's not about the rate. It's what's the payment and what can I afford in this home. And so I think you may see a flattening, and maybe in some areas a slight softening. It may be that sellers are giving now a little bit more in the concessions. Maybe some of the builders are doing some more upgrades, including them, or they're doing landscaping, which they hadn't had to do for a while. Right. But a lot of the builders have been building. They had deposits down, but when these rates jumped up, people couldn't qualify. Right. So a lot of the reservations went out the window. Even if they put deposits down, they were walking from their deposits because they just couldn't afford it anymore. So the builders are going to be sitting on some of that inventory. So it's going to be, for them, they're going to want to get rid of that inventory. Right. So I think right now it still could be, even though some in this article talks about waiting, it still could be a great time to go out and look to buy a home. And it really is based on your situation.
And I think I'm trying to put my finger or pinpoint a price point, because I'm a visual person. And I guess I'm trying to get people to understand that it's not going to be a huge difference. There's going to be some softening. There are going to be some concessions. Like you said, it just depends on where it's happening. If it's new home construction, they've already started reaching out to agents. You know, they kicked us to the curb for a minute for the past couple of years because they didn't really need us. There were some builders that actually opted to either not co-op, or they weren't paying a broker co-op fee, or they reduced it to something like 2% or 1%. And now they are calling us again. I've had quite a few agent friends say, hey, you know, this particular builder reached out to me, and, you know, they're calling me and stuff. And so, you know, in that area, they're going to, you just do what you need to do. You said earlier, it's a supply and demand thing. And so I think the important thing to emphasize here is that there probably will not be, and I still put the words probably will not be, a crash.
I don't believe there's going to be a crash. Could there be, again, I use the word softening. A lot of people talk about the Fed and a soft landing. Maybe we see a 5 or 10%, maybe in some markets a 15% correction in prices. In some areas, we may not see that much. So again, I wish I had a crystal ball because I would know where to buy and what to do. But I just think this time's a little different. I think the Fed's trying to handle the inflation and keep us from going into a recession. And that's going to be a key piece in the next 12 months to look at. So there's a lot going on in the economy. But I think, again, right now as inventory grows, you know, you're going to have people that are going to be a little bit more flexible in what they're going to offer and what you can negotiate into your contract, which you will be, I mean, all the agents will be working to do what's best for their either seller or buyer.
Right.
And then people that have to sell are going to give a little more. The people that have to buy, you know, they're going to have to, they'll have a few more options at their fingertips or a few more choices. Because in the past, it's been make an offer, 10 people, but you're in line with 10, 15 people. You hope you get it. You try that 10 times and you give up. Well, I think we're past those days. We're going to get to a point where it's going to be a little bit more buyer friendly, which is a good thing.
I like that. I like that term. It's welcome to the buyer friendly season, ladies and gentlemen. And you are listening to 97.5 FM KDEE. I am Agent Key with Mr. Dyke Mundy of Tri-Counties Bank. We're going to take a short break. And when we come back, we're going to jump into some loan options that work. We'll be right back. Oh, we got to say hi to some folks on here.
So how'd that go?
That was good. That was great. You kept me on track.
Okay.
Because I have a tendency to get passionate. You're like, wait a minute. I don't know about all that, Keisha, but this is what I do know. I'm like, okay, all right. I'll say it. I'm
just a rookie on the radio.
You did great. Shalon, greetings. Hello, Miss Teresa. Oh, you know what? Let me act like I need my glasses because I do. Hi, Miss Teresa. How are you? Wow. What did you say wow to, Shalon? I should have been reading the comments. Oh, both of you said wow. Sade, what were y'all saying wow to? What did I miss? Type it in the comments. There was something that I said or something that Dyke said that made y'all say wow.
Okay.
Thank you all for tuning in. If y'all are watching, type it in the comments and let us know you're watching. Say hello. So when we come back from the break, we'll get into I want you to talk about your products, your in-house products.
Okay.
And if we have time, then we'll jump into, we'll touch on the 10%.
The CalHFA.
Yeah,
we'll because really, because most of my talk, that's what I think hopefully we'll talk about that is the WISH, the CalHFA, you know, there's the FHA, the VA, there's all the products for people. And I think part of what I like to tell people is a lot of borrowers out there or buyers don't realize there's other options. They think you have to have a great credit score and I have to be able to come up with 10 or 15 or 20% down. That's just not the case.
Right.
And I think that's why meeting with a home mortgage specialist and going through your scenario, helping them make sure your credit, like we talked about Blue Water, working with somebody, and understanding where your down payment can come from.
Right.
And then it's which program do you fit, knowing some of these are getting tougher. I mean, right now are kind of tough to get into. And then, you know, we do have a portfolio, which gives us right now a little bit, but we're looking at some opportunities to do some things.
Once again, you're doing your dress rehearsal.
And I'll kind of set the table so people will know that. And again, I'm just trying to be honest, we are committed to this as a bank.
Yeah.
And it is something we want to do more of a community bank.
Okay.
And our focus is helping the community. I mean, we are service with solutions.
Do you want to start with that, and then we'll talk about the other product
why don't we do that?
options?
Yeah, let's do that.
Yeah, I think that's important for them to hear, because there are, I mean, like I said, all of my CalHFA buyers just dead in the water right now.
Yeah, when I go into that, I'll talk about, we'll talk more about some of these, the products that are available out there that we can offer and some other lenders can also offer.
Right. Yeah.
And there are challenges with those, but I'll talk a little bit about Tri-County, what we're going to be, what we're doing and why we're doing what we're going to be doing.
It's good to know that you guys are doing that. You're looking at those tough obstacles that make it difficult to use the other current programs. Okay, you guys. Oh, shoot. Y'all commented.
5.
I hear it.
Ready? Go.
Hey everyone, we're back. You're listening to 97.5 FM KDEE. I am Agent Key here with Mr. Dyke Mundy of Tri-Counties Bank. And during the break, we were talking about loan products at work. We said we were going to come right back in and talk about that when the show started again. And I want to give Dyke an opportunity to talk about their in-house program. Every mortgage company has typically an in-house product. And I'm really excited to hear about Tri-County's in-house product because of some of the specifics. And it's not out yet, but it's coming. Can you talk a little bit more about that?
Yeah, so in a little bit, we'll talk more about some of the programs, WISH, CalHFA, the Fannie Freddie products, VA, FHA that a lot of lenders offer and we offer. But in terms of Tri-Counties Bank, we're a community bank where we started in Chico, and we're primarily in California. We have about 75 branches. And our commitment is to our communities. And we try to find service with solutions for all of our customers. And so for us, understanding that the challenges with some of these other programs, with rates increasing, with home prices going up, there's still cash borrowers out there. It's tougher to qualify people to get them into homes. I mean, it is a challenge. There are people that will qualify, but there are some that are kind of right there on the fence, and we can't make it work.
Right.
And it doesn't matter whether it's us or somebody else.
Right.
So what we're doing is we're taking this very seriously as a bank, and we're looking for opportunities. We want to create home ownership. That's a focus for us. A lot of people will say it, but we're not only going to say it, we're going to try to put our money where our mouth is.
Right.
We're looking at providing grants to some nonprofits that they can use to help create home ownership. But we are also a bank, so we have our own money. We have a portfolio we can leverage. So some of it may be coming up with, and we're talking about some programs where we can discount some rates, do some other things from an LTV perspective that instead of looking to sell the program or the product, the loan, we could keep on our books.
Keep it in-house.
Right now, we do about 50% of our loans are portfolio. The others are saleable. We service all our loans, which is a good thing. But in terms of not having to sell it to Fannie, Freddie, or another investor, it gives you a little bit more flexibility.
I asked you to give me an example of some of the things that you guys are taking a look at to make a product that really works. And you talked about the interest rate. Give me an example of what that.
So something might be, again, allowing for a limited down, like a 3 to 5% down payment. We could still use some down payment assistance money on the backside to help somebody with that. It would be us or some other program. But it may be, instead of having an interest rate at 5.25 or 5.5 or even higher with some programs out there, maybe we offer something in the high 3s or 4.
Right.
And again, we haven't said anything, but if we did that lower rate, which would lower your payment, would allow someone to qualify for a little bit more home and maybe get someone in that home that they're just not able to get into with the traditional program today.
I love that, because that is that's taking a real look at the real problem versus, like we said, we're going to talk about CalHFA. I know a lot of buyers. I have a lot of buyers that are trying to use the CalHFA program, and it's been used a lot in the past. It's a really good program, but the rates today are so high, it literally took all of my buyers out. And it just seems obvious that if CalHFA were really wanting to make that program work, that they would find a way to get that rate lower. And I don't know, I'm not a mathematician. I'm not in finances. I don't know how you can just adjust that. But you just said y'all are taking a real look at how to get that rate down, because that's part of the issue.
Yeah, it's too bad. I mean, I get it with CalHFA is their rates now are approaching 6. Their equity builder program is awesome. When you can get 10% of the purchase price and use it for down payment and closing costs, it's awesome. But if you can't qualify somebody for that because the rate's so high, and that increases their payment, then it doesn't do anybody any good.
Right.
And I'm not saying no one will qualify, but you've eliminated, as you said, a bunch of buyers
Yeah.
out there. So, we're trying to look at it from a little bit different perspective. And I know we're not the only bank. Some of the other banks are going to try to do, but I can say from a community bank, especially I'm here in Roseville at my offices, but we have branches up and down the state of California, from the Oregon border down to Bakersfield. That really is our focus.
Yeah.
And this is our focus, is to help, specifically first-time home buyers, and specifically the low to moderate income borrower who is struggling to get into a home today.
Just a side note, I was in Oroville looking at property on Saturday for a seller, and I was coming back to Sacramento, and I saw Tri-County's bank office. I was like, oh my gosh. So you have a presence everywhere, and I'm excited to see that there is a community bank that is really taking the steps that you all are taking to make a real impact in home ownership. And you said that's one of your goals.
That's a huge initiative for the bank. It's for good reason. It's why I've been doing this for over 25 years, not to date myself, but I do this because I love helping people. It's rewarding when you get to help people purchase a home, and when you're handing them the keys when the loan closes, or even a refinance, you can save them money. It puts them in a better financial situation. I've always said your mortgage is your biggest liability, and your home is your biggest asset.
Right.
And so when you can help people create that ownership, and cover that liability, the mortgage payment, and feel good about it, and still have money left over to do all the other things and save for all the other things we need to save for, that's a big deal.
Yeah, it makes life better.
Yes.
There were some comments from some of our viewers, and I missed them earlier, so let me see if I can go back and make them make sense. Oh, the percentage for Sacramento. Yeah, when I show the percentage. Even though I'm in Vegas, I still love the information provided on your show. Well, thank you, Ms. Shirley. We appreciate that. So if you all are watching, if you have any comments for us, please feel free to type it in the chat. And so now we're going to dive into the programs that you said something earlier, and I appreciate the offline conversations we were having. And I'm thinking, oh my gosh, hold that, save that for the show, because you mentioned the programs that you have access to, but there was a way that buyers don't often know that the options are out there. Talk a little bit more about what you've seen as far as buyers not knowing, and not that they get locked into something, but why is it important that they know what other options are available to them?
Before I answer that, so Shirley, who sent us from Vegas, the good news is, Shirley, we do lend in Nevada and Oregon on top of California. So those are the 3 states where we can lend in. So for someone listening in Vegas, that's an area we can lend in. So that's
Tri-County has you covered.
Okay, so one more time. So
why is it important that buyers know? Yeah.
So I think there's a lot of misconception out there. And I'm not saying by everybody, but some people believe you have to have a certain credit score. If I don't have a credit score of 700 or 720 or 740, I can't buy a home. It's true, the higher the credit score, the lower the rate. So it's always good to do what you can to improve your credit score. And there's a company we work with to help people do that, but that's a key. But you can get a loan with a score lower than 700. The other is down payment. Some people believe that I have to have 20% down, and that's just not the case. There are programs out there with as little as 3% down, and the 3% can come from gift. There's down payment assistance programs out there that can help. So there are ways to come up with a down payment. There are people with even lower credit who can still qualify for a home. Gift money can be used, and some people don't understand the use of gift money. So it's just good to talk to a home mortgage specialist to understand, one, can I qualify? If so, what do I qualify for? How much home based on the payment that I'm going to make? Am I comfortable with that payment?
Right.
And 2, if I can't today, what do I need to do to get there 3, 6, 9 months down the road?
Right.
It may be working with someone to help improve my credit. It may be just paying off a little credit. It may be trying to save a little. And I know savings is getting really challenging, especially with the economy the way it is. A gallon of gas is almost $7. So it gets tougher for people. But it's, can we help you save? Or do you have a relative who would be willing to gift you? Or is there a program out there with a nonprofit, and we work with just about all of them, that we can work with to help with some of that closing cost or down payment money? So there's a lot of options. And I think people, until they really spend the time to sit down and have a full consultation, with a home mortgage consultant, go through everything and actually get pre-approved, they really don't know. And I think that's the first step they should take.
Mm-hmm.
So I like to say people can shop with confidence. They
Okay.
know what they can what they can buy. They feel good about it. Their agent feels good about knowing what they can qualify for and what they're approved for. And they can go out, and as they look at these homes, it's not going to be, I'm going to show you this. You're going to go talk to a lender. Oh, you don't qualify for that home. Now they're all bummed out because the home of their dreams they can't afford.
Right.
It was too much house.
Right.
So
Yeah.
let's know that up front. So to
And
me,
knowing
that's
what those options
education is key.
Now, you have a team of loan officers that work for you. So if someone is listening right now and they want to know how to have access to all of these options, who would they reach out to at Tri-Counties?
So great question. I currently have 21 loan officers who work under me who cover our entire footprint.
Okay, that's a
They are
football
all,
team.
They are exactly. It's a football team. We got offense and defense. But I would say you go to tricountiesbank.com or tcbk.com and go to the home mortgage page. And all of our loan officers have their picture there.
Okay.
They have a little bio, and they have a way to contact them.
Okay.
So if you want to look by picture, you can do that. If it's location, we've got them covering the entire footprint. And so they just get a hold of one of them, and they would love to set up an appointment either on the phone or face-to-face and sit down and talk with you. And hopefully, if you're really interested in buying, is go through the pre-approval process.
Okay. And so I often tell our listening audience to just have the conversation. Even if they weren't thinking about home ownership until they tuned in today. Oh, y'all are talking about housing. I never thought, somebody listening right now has never even thought about being a homeowner. I want you to take 3 seconds and just tell yourself, I could be a homeowner. And then go online and search for Tri-Counties Bank, call one of the loan officers, and just have the conversation. Tell them, I was listening to this radio show and your boss was on there and he told me to give you a call. And I just want to have a conversation because I'm renting today, or I'm living with family, or I'm living somewhere where I don't want to be, or I'm comfortable here and just never thought about home ownership. And I just want to map out a plan. And so can you help me map out a plan? And know that in order to do that, they will ask you to take an application because they have to take a financial snapshot. I call it a financial snapshot. They need to see where you are to help map you out to where you want to be. So let them run the credit. Don't be afraid. You just heard Dyke say that they have resources to help you restore your credit and get it where it needs to be. I think, do you also use Blue Water Credit?
We use Jeff and his team over at Blue Water Credit. So shout out to Jeff. They do a fantastic job with our borrowers, and we constantly refer people because credit's one of the bigger challenges.
And y'all know how I feel
Yep.
about Jeff. He's been on the show a few times, and we do events with them. So Blue Water Credit, give them a call. The point is, today is about you preparing for what's coming, the possibility of what's coming. We're talking about the possibility of the market softening. The past couple of years, it's been a challenge. It's been a struggle for buyers, but you can actually position yourself today, and your future self will thank you for positioning yourself today to get yourself into position to purchase when the opportunity presents itself. I'm a firm believer that opportunities are all around us all the time. It's just a matter of whether or not you're prepared to take advantage of that opportunity and if it's the right opportunity for you. And so if home ownership is something you have considered, now's the time to get ready. If home ownership is something you have not considered, and now we've dropped this seed and you're thinking about it, now's the time to get ready. So we want to dispel the myth that the only time you talk to a lender is when you're ready to buy because you've got $100,000 in the bank and your credit score is 780. So Dyke is saying no. Every lender partner that I've had on this show has expressed the same sentiment. I think the lowest I heard one of my lender partners say that they could do was 530 credit score, something like that. But with a caveat, that interest rate might be high. You might have to come in with a lot more down. But there are programs where they can make it happen if that's your goal. Or the better thing to do would be to work on the credit, get it to where it needs to be so that you can be able to take advantage of more opportunities. And that's where time comes in. And so in talking about some of these other programs, let's go over a few because you guys offer them also.
Yeah, and before we get, I'll just add on to what you said in terms of some people, they don't understand, they don't look at it from a financial perspective. So if you're paying rent right now, and let's say you're paying $1,200 or $1,300 or $1,400 in the Sacramento region, that's
low.
Standard. It's probably higher than that. And if you start talking about buying a $400,000 home with your principal and interest payment, your taxes, your insurance, and you're probably going to have MI if you're over 80%.
Right.
Maybe your payment's a little over $2,000. So yes, there's a payment change. It's a little higher.
Yeah.
But it's home ownership.
Yes.
You're creating equity over time. And again, there's some tax benefits to owning a home, and it's just home ownership.
Right.
I own this home rather than renting and letting my landlord make money on that building that he's renting to me for X number of dollars a month. So,
and no one's going to send you a notice telling you that you have to move because they've decided to sell.
That's right.
And I think that's one of the biggest issues that I see so often that's so heartbreaking that we can't really do much about these days, whether it's to help someone find another place to rent or to buy. Because now we've got to hurry up and try to get you ready to buy.
That's right. So some people are just thinking about it from those terms. So in terms of some of these other programs, again, there's great products, and we're not the only lender that offers. You have FHA, you have a VA for veterans, which is a great program. You have your Home Path and Home Ready, which are Fannie Mae and Freddie Mac programs. We offer, we're one of the banks that's allowed to do the WISH program. The WISH program.
Talk a little bit about that,
so
because we
program,
had someone on. We had two people on the show promoting that product a couple of years ago, and I heard through the grapevine that not a lot of people qualified. So are you guys getting people approved through that program? Yes.
And again, it's challenging. I'm not saying it's easy, and it's why you sit down and talk with a home mortgage specialist to see if we can get you in that. So it's based on your income needs to be 80% of the median income for the area.
Okay. So we know that's like 75,000, right?
That's household income. So if you have a relative living with you who collects Social Security, I've got to include that Social Security in your income. It's also, but the income increases based on size of household. So if you have 4 people in the home living with you, that income goes up. If you have 5 or 6, it goes up even higher. So let's just look at a household of 4 people. Let's just say one person works, the 2 kids are under 18, and even if they work, I'm not counting their income.
Right.
The other spouse doesn't work. That amount is the 80% limit for Sacramento Roseville area is $81,000. So that's about $6,700 a month. So what can I qualify somebody for using $6,700 a month? That's what I need to qualify. What the program is, it's a 4-to-1 grant. So if somebody puts down, or either through savings or through a gift, $5,000. WISH, the federal money from the Federal Home Loan Bank, it's grant money that they've set aside, will grant $20,000. So I put that together, you now have $25,000 for closing costs or down payment.
And the max is the $20,000.
It's actually $22,000, $5,500 individual, and then $22,000. So the max you can do would be $55 plus $22. So what's that? $27,500.
Okay.
It's a grant. Every year, 20% of that money you receive, let's call it $22,000, is forgiven. So after 5 years, if you stay in your home, the money's forgiven and you don't pay it back. So I like to say it's free money.
Right.
Free money to the borrower. And it's a way to get people in the home. Again, the key is qualifying based on the income. Do you qualify based on income? And can we find you? Can someone like you find that person a home? And I know, as we talked about before we got on, there's only so many properties, because that in Sacramento probably qualifies you for a home price of around $375-ish.
Right.
I mean, I don't want to be specific, but it depends on how much debt that person carries, whether it's a car payment, student loans, or other credit card debt we'd have to count in there. But roughly, and so how many homes are there at that price point or lower where you're not competing with cash? So that becomes the other challenge in this process. But WISH is a great program. The Federal Home Loan Bank on April 1st sets aside, this year they did, I think, $10.2 million. And I will bet you, assuming about $15,000 per person is given out, that money by middle of December will be gone. So there's 600 or 700 families that are going to take advantage of that money in the state of California, which means there are homes out there. They may take a little research. There may be a home that's maybe not as nice as you want it, but you're in, and then over time you can do some fixing up and make it really that home that your dream home, but it's a place to start. And I think that's the key.
So that the guidelines and the process is similar to the 10% equity builder program.
CalHFA, huh?
Yeah, the CalHFA. And if only we were building more affordable homes, then we could definitely see. I'm thinking, because you said 600 to 700 buyers throughout the state of California.
So yeah, if you take 10.2 million,
right,
you
they're
divide
getting
it by
about 15,000
yeah.
each. And so are you seeing, or do you know where the majority of those funds are being spent? Is that data that you guys keep up with? Or
That's a great question. I do not. I know there are some reps who have worked for me in the past at other institutions who love that program up and down the valley and do a lot of them. They'll do 3 or 4 a month. And so I think it's typically not in your, like if you were in downtown Sac, you're probably going to be tougher than if you were in an outlying area, or some of the areas that are now being regentrified. I mean, they're up and coming. And so I think it's really, and again, that's why I think an agent is such an asset to help you as the buyer find, assess where you're looking to buy and to source and look for those properties. And then you show them those properties and what's available out there in that price point. But it's a great question in terms of where that product's being
utilized
used.
most,
And I'm not absolutely sure of that.
Can we check back in with you after you take
find
that out for us
and see if I can find out for you?
Yeah, I would love to. I realize and see that it can work. And if the money is being used, it's working somewhere, right? So where is it working? Why is it working where it's working? And what can we do to tweak it to make it work better? Can we do anything to tweak it to make it work better? Ladies and gentlemen, you're listening to 97.5 FM KDEE. I feel another break coming on. We will be right back. What time is it? Is it time for a break? Okay.
You look so good.
Well, how's it going? Is it going good?
It's going very well. Look, I just felt the break coming on, but I was like, but I want to talk more, but I feel the break coming on. It's a very fluid, natural conversation.
Yeah, I love
You're
it.
doing great.
You're
doing great. You're doing great. Let's see. Did I miss any other questions?
I do.
Oh, yes. He gets questions and comments throughout the show.
I get questions throughout the show, man. Can you?
Someone is really trying to call me. Can I call you real fast? Hi there, comma, I'm on air right now, comma, the radio show, period. Can I call you after 2 p.m., question mark? I'm on the air. Hey, Christina, comma, I'm on the air right now, comma, can I call you after 2, question mark? Radio show. Just in case someone doesn't know what on air means. Which of these do I need to answer? Okay, everybody else can wait.
There's a great question. I enjoy living in the Tillmans. Is West Sac a good area to purchase a home? I think West Sac's a great area.
Did you? Will the new North Lake community in the Tillmans be the next Greenhaven pocket area 20 years from now? Mike, what kind of question is that? I have not a clue.
It's interesting. If you just think of different markets in Sacramento and how they've changed over the last 20, 25 years in different areas. Some have stayed the same and some have improved.
I would think with regard to, so anytime I think about Greenhaven and Pocket, if you know the history about the Greenhaven community, it was a development. It actually won an architectural award when it was first built because it it was the first community in America that was built full service, where people lived, work, you work and play and live, and you didn't really have to leave the community. You can stay right there. And the architecture, the style, the trees, everything was just so fluid. Um, a lot of communities across the country, as a result, were built based on the framework of the Greenhaven neighborhood. So when you ask the question, is the North Lake community, will that be like Greenhaven? I hear them coming back. Um, I think Natomas has its own little personality. We're back. You're listening to 97.5 FM KDEE. I am Agent Key, and I am here with my new lender partner, Dyke Mundy of Tri-Counties Bank. And we're looking at questions online. I'm trying to look at questions online. I keep taking off my glasses. Our guy, Mike Snell, asked the question, will the new North Lake community in Natomas be the next Greenhaven pocket area 20 years from now? And my response to that was, if you do a quick Google search, you'll see that Greenhaven actually was a community when it was created. It won an award, nationwide award in architecture for its design and the way that it provided. They built schools and businesses. It was like a wraparound service community, along with the architecture. And so it holds its value to this day. As a result, when bad things happen in the economy, it rarely shakes the Greenhaven area. When there's new construction in the Greenhaven area, if you've seen it over the number of years that it's been there, there are some new, like, pull apart townhomes that go down pocket, and they are probably less than 10 years old, but they look like they've been there forever, because the way that the community is designed. So when you're putting something in that area, it's just like a piece of art type of community. I will say, though, I did find another neighborhood in West Sac, and I won't tell you where it is because I'm probably going to move over there. I don't want y'all creeping around. No, I'm joking. But it reminds me of the Greenhaven area, and it's right off of the other side of the river. But the construction is newer. But what I love about it, and what I love also about Greenhaven, a lot of the homes, the architecture is different. It's not like, you're not designing a house where the house across the street, every 5 houses look the same. And you don't see that in Greenhaven. You don't see that in this community in West Sac. And a lot of the homes that are being built, they only have so many elevations. And so you see the same houses over and over again. The colors swap out, and so I think those are the things that make those types of communities unique. But hopefully that answered your question, Mike. It probably didn't. I think that Natomas has its own flair. I think that's what my bottom line. Natomas has its own attitude. Would you say? Are you familiar with Natomas?
A little.
Yeah. I think I'm not a, what would the word be? Natomasan? I'm Natomasite. I'm not a Natomasite, but I've worked there a lot as far as helping people buy and sell, and I think it has its own little flair. If y'all are watching or listening, you can let us know your thoughts. Let's see here. There was another question. I enjoy living in Natomas. Is West Sac a good area to purchase a home? No. I said that because I said I'm moving there. Yes, I think West Sac is a great place to purchase a home. So Miss Serena said, hey, Keisha, one good thing about being homesick with COVID is I'm getting to watch your always informative show. Well, Miss Serena, I'm sad to hear that you have COVID. I hope you get better soon, my dear. Sorry to hear that. So Mike is saying exactly, the value is still strong there and very low turnover. Yeah, with regard to Greenhaven. Yeah, when people sell their homes in Greenhaven or Pocket or Little Pocket, it's usually because they've owned it for 20, 30 years. And a lot of the people that hold on to those properties while they're owning it, they update, and then the house is just worth even a ton more. So it's one of those places that if you can get in there, boy, yeah, you're going to be good. I got to say, I helped the, can I call his name out here? I helped the one and only Jay King secure a property in Greenhaven, and it was the grace of God. The agent, the listing agent, I knew her personally. The house was on the market 2 days. It was right before COVID, and we made a strong offer. It wasn't crazy high or anything. It was right where he wanted to be. And the house is just, and he has made the house even more beautiful. Big old koi pond in the back with the koi included. And it's just a really beautiful home. And he secured that at a perfect time. But the owners had the home. They were the original owners of the home, and it was a custom build. And so, it was a blessing from God. But we got to get back to the show. Thank you all for your questions. And before we go, because we only have just a few more minutes now, is there any information that you'd like to leave with our listeners and viewers with regard to tri-counties, what you're doing, what buyers should expect? I'm going to let you have the floor.
So a loaded question, but I'll go at a couple different angles. One, as I said before, please, okay, you talked about it, reach out, go online, contact one of the loan officers, or we call them home mortgage specialists, and that's true, they're a specialist with a ton of experience. I think all of them have at least 10 years, and some of them have a lot more. And just talk to them, have a conversation about what you're looking to do. Like you said, take an application if you want to go to that that far, which is something you should do if you're interested in a refinance or a purchase, just so they can get you. I like to say we get into your financial soul, but we have to, because we need to know everything in order to make the decision and get you the best loan possible and see what options you qualify for. So please reach out. What you can expect is incredible service. I think that's what we pride ourselves in. As I said before, we're service with solutions. In mortgage, we can compete with the cash offers. We're closing purchases, and I can't say everyone, but as long as we get the appraisal back in a few days and the borrowers cooperate with getting us the documentation we need, we've closed purchases in 12, 13, 14 days.
Wow.
Refis we're doing in 25 to 30. Wow. So we're able to turn things around quickly. Sometimes you get logged in with some of the banks, and they say, well, the banks take too long, and that's not true. We're closing deals quickly. In fact, sometimes before the agents are even ready for us to close, and they're saying, wow, you're ready 2 weeks before I'm ready to close the deal.
Wow.
What happened? Well, that's just normally
that's
what
how
we
you
do.
operate.
That's how we work. That's how we roll.
I love it.
But I would say the other great thing about Tri-Counties Bank is my partners. We have I've got great partners throughout the bank. We work together as one team. We work together, again, to help all of our customers with all of their financial needs. So whether that's banking, stop by one of our branches and go visit. They're there to help you, and they're going to, they're a warm, open smile, and they love to help customers. I mean, that's what they're there for. It's not a transactional bank where there's a line of people waiting. Right. It's a bank where you're going to go in and be able to talk to somebody. We have advisors who can help with financial decisions, bankers that help with business needs, or we have a commercial department helping with commercial needs. Nice. So it's kind of a full plethora. So if you're a small business owner or a middle-sized business owner, or you're looking to buy a commercial piece of property, we can help you with all of those needs. So
what's the closest location here in Sacramento for someone?
So we have a branch downtown on K Street. Okay. Then we have one up in Roseville, close to about a couple blocks from the Galleria, and then one in an in-store up in Folsom. So those are our three branches we have. Plus, for the Natomas person, we do have one in Natomas also.
Oh, awesome.
And then one out in Woodland. So those are the closest to Sacramento. Okay. But again, a lot of people are going online, so feel free to reach out to the bank, or you can get your financial needs through our online or our banking service, mobile or online. So we can help you in any way you want to be helped.
And you did mention business banking as well.
Correct.
So it's really good to have a business bank where there are people who are working in the bank that have been there for a long time, because that means that you're going to get that preferential treatment. They're going to get to know you as a business owner. They're going to get to know your needs. And those are the types of community banks that you want your investment invested in, right? So location in downtown Sacramento, in Natomas, in Roseville, Folsom,
Woodland,
and Woodland, as close as Sacramento. Now, do you have anything coming in South Sac and Elk Grove? Can we expect that?
I would tell you, we are actively looking.
Okay.
And I know our president CEO, Mr. Smith, would love to find some more branches for us to expand from Sacramento South. In the Valley, we just finished purchasing a bank, Valley Republic Bank in Bakersfield. So we went from one branch to 4 branches down the Bakersfield market. It was a really big deal for the bank, and we are so happy.
And I think we talked about that. I asked you about that because I went down to Bakersfield and it's booming out there, and I thought y'all were strategic and getting out there.
So we are looking, and we're actively looking. I'll put it like that.
Okay. Now we had talked before about you were recruiting. Are you still recruiting? Have you guys put the pause on that?
No. So I would say for me, I would love to hire loan officers in the Sacramento area. I'd love to hire a couple more. So if somebody out there, I really need somebody with experience. It's as tough as it is, as we're talking about today. It means deriving your business is going to be equally as difficult because the refi market is slow. So it's just, somebody coming in new, it's going to be a very difficult time to come in. But for someone who's looking for a bank who has, can provide the level of service we talked about, support the products. I mean, I didn't get into, we do land loans, we do construction loans, we have, we'll do hobby farm type stuff. So we do some of with our portfolio, we do some kind of unique stuff property wise and even borrower wise. If you're looking to get in with a bank that has all that, has a lot of these down payment assistance programs, and is really committed to going and helping first-time home buyers, and that's what your passion is, I would love to talk to you. So please, you can send me your resume at Dyke Mundy. So it's DYKE Mundy MUNDY at tcbk.com. And I'll make sure I reach out, and I'd love to have a chat.
Say that email address one more time, and I'm going to put it in the chat before the show is over, because somebody listening is a loan officer that's experienced, and you're looking to move. You're looking to make a move because you're not getting the support, or you're at a location where the passion is not there, and you may not have access to the resources to be able to help your clients the way that you want to, but you have the drive, you have the motivation, you've got the experience, and you want to make it happen. Give us your email address one more time.
Yeah, send me your resume at Dyke, DYKE Mundy MUNDY at tcbk.com. And I will tell you, I have a couple different comp plans that are I think I can compete with anybody on the street. So from a commission compensation perspective, not only from, again, what I can pay, but what benefits the bank offers, I think we can compete with anybody. So it truly will be, if someone's looking, a great opportunity.
This is a great opportunity for this time when we see a lot of banks are letting people go. So it's nice that does something about what you guys are doing at Tri-Counties Bank. You guys, that is our time. Is it? Oh, we're 1 minute past our time. That's okay. You all know that he gets the flack for me. if I get called into the teacher's office, Dosti takes the heat for me. So we're good. Thank you so much, Dyke, for being on the show today. We got to have you back. We got to have you back for the follow-up so that we can see what's going on with that WISH program. We got to have you back for the follow-up, just because we want to see what direction the market actually went 6 months from now, so we can talk about it. And ladies and gentlemen, remember, tune in again next week, because we are going to have Jeff Collins here from Answer Home Loans. We're going to continue this segment. We're talking about the money and getting you ready for a reason. The opportunity is coming, and we want you to be ready. I'm presenting all of these lenders and mortgage companies to you to let you know that they're out there. Don't be afraid. This is what you need to do. This is the direction you need to go. And these are the people who you need to call. You're listening to 97.5 FM KDEE. I am Agent Key. And remember, if you are doing what you were created to do, I will see you at the top. Good job.
Awesome.
Thank you.
Awesome. Thank you.
Did we get any more questions for you before we leave?
And I have people texting me.
Oh,
okay.
That's good. That is so good.
That's good. Then I like it. If people aren't texting or
you are
emailing,
so welcome, Miss Shirley.
Okay.
Mike said, great show, and thanks for coming on. Mike Snell said, thanks for coming on. Great show. Great show. Thank you. You're welcome. Okay, you guys, I got to go. And y'all know I'm doing my intermittent fasting, and it's time for me to eat. All right. Talk to y'all later. See you next week. Bye. Yes, sir. If I did what? Oh, leave my business cards too?